Here we go. Live across many platforms. This is the Business and Property Entrepreneur Podcast. We have done over 250 episodes over the last few years, and you're in for a real treat because this guest who we have on tonight, he's not someone who's going on sharing his wisdom on any platform. In fact, I don't even think he's been on any platform before, and we've been the first one. I had to chase him down for a long period of time just to get him to come on and share his knowledge. So we are in for a treat. Yeah, we are in for a treat. So let's just make sure everything is here working. Let me know all the people on the comments, the chat here, that you can hear us and you can see us. Yeah. So look, our guest, as you can see, is Mr. James Lomas, and 13 years experience in the lettings, the rental market. He's here to share his experience. He's managing over 700 units in the HMO market, which is not like a normal buy-to-let market. Very, very different. And we're going to delve into some of those secrets and some of those problems, some of those challenges that people run into. Yeah, because they underestimate what it takes. But when done properly, very profitable, very awesome for the property market. And it's definitely helping out the government hit some targets on, creating more luxury, but also affordable living. Yeah. So I understand that also you're expanding your business. We're all going to be going into that as well, into the sales side of things. But yeah, James, just give us the highlight reel, of who was James growing up and how do you end up doing what you're doing today?
Hi guys, it's first time ever doing it live, so you have to bear with me a little bit, and I'm a bit flued up as well, so excuse me voice. So as Mark said, I've been in the property industry for over 13 years now. Originally started off in corporate sales and worked my way up through a big corporate estate agency, and then about 8 years ago we had a dream and a vision to start our own agency, which is Monkey vs. Owl, and we've been established for 8 years now, and growing. We opened our first high street branch last year, and again we've got bigger plans to expand again this year. We're looking at another 2 branches in 2025. So the growth continues.
Yeah, I love it. So let's just get straight into it. The reason why we do our podcast lives, because it's just real, it's raw, it's not edited. We don't, pick and choose what we want to be out there, what we talk about. But let's just go, let's first start quite high level in terms of the rental market. In your experience, what have you seen over the years in terms of the ups and the downs or the changes? If you were just to recall upon your experience, how have you seen the rental market evolve?
I think initially the quality of the HMOs has just got better and better and better. We initially quite luckily fell into the HMO market before it really taken off in Derby. It was, look at the draw, and at the time I don't think the housing quality was great, and I just think the levels are just year on year. The spaces have got bigger, the interiors have got better. I think initially when we started out, it was all about ensuite bedroom. Well, rooms with shared bathrooms, and then it went to ensuite bedrooms, and now it's people are pushing for more and more studios. So I think COVID really pushed that on, the need for quality self-contained living conditions, and I think that's the market in Derby's obviously gone through the roof. So like I said, I think the quality's changed really over the years.
Yeah, and here's the thing, our businesses have significantly positively impacted each other. Yeah, because obviously we had many units on the market, and our kind of mistakes of trusting people to do it when they didn't really have the credentials. They just wanted to do it. They wanted a client with over 100 units at the time, and you actually then was about the fourth reiteration of saying, hey, can you take on these properties? But this time we did it slowly with you. Yeah. And you're right. I remember when we started doing HMOs ourselves in Derby, and then the Real Life Tribe and the whole community started increasing the standard. I mean, before people just used to put a bed in a room, put a lock on the door and be like, yeah, here's a HMO. Yeah, terrible. Yeah, that wasn't even just Derby. This was happening in Loughborough, even though it was Article 4 and the standards should be a lot higher, but it just wasn't. Yeah, so you're dead right. It has increased massively. Yeah, so in terms of the standard increasing, yeah, like what has the like how has the tenants responded? Have they happily been paying increased rents? Has this how has this affected like occupancy rates for like, over the years?
Yeah, I think ultimately there's a price and there's a value for everything, but it just attracts different types of tenants ultimately. So I think the better the property, the high quality that it is, then we're just going to attract essentially better quality tenants, which essentially means you're going to get better quality tenant that's going to pay a higher rent, that's going to less likely fall into rental arrears, it's going to look after the property better, likely to stay longer as well. So I think the better standard properties tend to get the better quality tenants. I'll probably be right in saying that.
Yeah. That's good, and I know because obviously I work with you with a portion of my portfolio, and you work with many other people in our community as well. But what would you say? Because a lot of people, they're just trying to push. I want the high rents to get my high, reevaluations and so on, which is on the investment side. Investment side is one, but obviously running and maintaining and managing a HMO is the other side, right?
Yeah.
So, like, what would you say? Because if it is, pushed to the high hills, you might get someone in, but then like if something else comes up, or if someone needs to be a bit more what do you call it, cost efficient in their lifestyle, they might then move somewhere else. What's the difference between offsetting how high I might want to go and charge rent versus how many times I'd have to keep paying the tenant finder's fee and the referencing fees and so on?
Yeah, I think it's just finding the balance ultimately, isn't it? And what I'd encourage any investor to do beforehand is speak to us really before they purchase the property. I speak to lots of people a year before they've actually purchased the property, and what we really need to do is want to make sure you're getting it in the right area. You see a lot of investors that are buying from outside of town that don't really know the correct areas to buy in, and they'll see a cheaper property and then kind of want the maximum rents, but you're not always going to get that in a certain type of area. So just encourage anybody to speak to us really, so we can price it accordingly. I can generally price things off a floor plan and off an area and give you a rough estimate. So I'd encourage you to speak to us beforehand, essentially.
Yeah, absolutely. Yeah, good. And you helped me over the years. So obviously when we're teaching as well, we're always say once we got the strategy, you're going to need to know the area. Yeah, but you can't just say Derby. Yeah, because as we know, there's some hot roads for HMOs, there's hot roads for flats and so on. But then there's ones that are not so hot. So you can't just take, Liverpool this, or, Leicester or Loughborough. Like there will be places where it won't work out. You'll have void periods and things like that. So what are, like, in your experience, what are some questions that people need to ask themselves before they just go diving in thinking, the property's good, yeah, or I can turn this property into something good? What do they need to be asking themselves before they go and do that?
I think you need to ask themselves, are they ready for this? It's not always a case of it's going to be hands off. There's lots of things to do in property all the time, and we're an agent that communicates regularly. So you tend to find with HMO properties that it's not. With the turnover of the tenants, there's always a lot more maintenance, probably 3 or 4 times the amount of maintenance that you'd have done in a normal buy-to-let property. Tenants generally can't do things for themselves very easily like you would in a normal buy-to-let property. So I just think although we're a management agency and we'll take care of all your day-to-day running of the property, there is always going to be something to do and questions to answer and decisions to make. So it's not a completely hands-off experience is probably what I'd say. It's it can be quite stressful if you've got that void or 2 voids and that's your profit for the month. So just think that, you have to be aware of some of the risks, I guess, when getting into it, but it's super rewarding if you get it right.
Yeah, absolutely. So like this is one of the things that people so underestimate. Like you say, 1 void, okay, might still be okay depending on how the deal stacked up in the first place. But then 2 voids, a lot of people will start getting into trouble, especially if it's only a 6-bed HMO. Definitely if it's only a 5-bed HMO. Now we're starting to border on like it's going to start costing you money at some point, especially if you've refinanced it at a high valuation. Yeah. So what are some of the things that actually you know, because obviously your team, you get a lot of interaction with what tenants are looking for. Like, why are they going for rooms and why do they not go for rooms?
In what sense? Sorry.
You know, like obviously you're having these people come into view. What's the most common thing they're like, man, that I want this property? Like, what type of product basically is why they are going for it? And in your experience, what are some of the harder rooms and the harder properties to fill? Why do they say, well, no, tenants are saying, no, I don't want it?
Yeah, I think it really comes down to, again, location is a key factor. What area the tenant's looking for, but then it's also like the size of the properties as well. It's again, I'd encourage landlords not to squeeze as many bedrooms in as they possibly can, because they tend to find the box rooms generally don't fill as well. So you're going to want sizable rooms essentially, so people stay in there longer and they don't feel like they're boxed in.
Yeah, that's a massive mistake, and I tell you, I'll put my hand up. That was a mistake that we made in the first one. How what's the difference between, like, let's say non-ensuite rooms where they've got to share bathrooms, the double ensuites, and the studios? Is there a market for all, or is one, you know, better than the other?
You tend to find a shared bathroom. That's a dying trend. We don't see many of them anymore. We've got a handful on our books, and again, like I say, there's a market for everything, but they are cheaper. The ensuite room market seems to have picked back up again. Actually, we've been really busy over the last 3 or 4 months on ensuite rooms, whereas it had quieted down last year, but over the last 3 or 4 months, it has really picked up. Actually, we've not got many available rooms at the moment at all, across all locations. So, and then the studios, like, I just think the studios, I think why we're seeing more studios on the market is obviously everybody's building them at the moment and everybody wants top prices. So we always look at something called the 3 Ps in our industry. So it's looking at the presentation of the property, looking at the promotion of the property. Are you on Rightmove? Are you on Spareroom? Are you on the right, portals? And then we look at the price of the property. So are you priced correctly? And in terms of getting people through the door, you have to look at like a sliding scale. We tend to find if your property is really highly priced, you can have less people viewing it. And if your property is really lowly priced, you can have hundreds of people viewing it. So you really just want to try and find that balance in between, so you're getting the right amount of people viewing it and you're getting the right price.
So is that why you think that more people, like the double ensuite market, is picking up and people are going for that? Because they're kind of weighing up, like, why should I pay so much more just to have my own, like, kitchen unit?
Yeah, I think it's preference, isn't it? And budget. It's preference and budget and how long somebody's going to be staying there. If you've got, we deal with quite a lot of contractors that stay Monday to Friday, so they don't necessarily need to be paying an extra £300 on the rent for a kitchen when they're going home Friday, Saturday, Sunday anyway. So it's it's personal preference really. You have a lot of people that come from out of the country that do want a studio and that do want their own privacy as well. They don't want to be kind of integrated within a household. So
yeah. So what would you say if it's like, I guess, like, the jackpot person is someone who obviously takes care of it and is going to stay there longer term? What type of products, like, when I say product, I'm talking like the room, right? You talk about the presentation, like what kind of thing should we create if we're going to get like the best types of, tenants and people who stay for longer?
I think when it comes to the studios, to try and separate the spaces generally works really well. We see lots of studios that are kind of like the kitchens on top of the bed. People don't generally stay in them as longer term. We have quite a lot of properties that maybe have had like an L-shaped dormer at the back, and the kitchen's kind of over this way and the bedroom's over here. So I think separated spaces to make it feel more like a flat environment. People generally stay in them a little bit longer because they've got, again, come back to that space element. It's, they're living in this property ultimately, so they don't want to feel caved in and boxed in. So that would be my advice, to try and separate the spaces somewhat.
And what are all the types of different properties that you do deal with in terms of management?
We'll put our hand to anything, to be fair. So majority HMOs, but we've got a big student portfolio as well. We've got a residential portfolio, and then we've opened sales this year. So ready to kick on with sales. But we'll put a hand to it. I believe in what we do, so we'll put a hand to anything. We believe we'll be able to give the best quality service.
Good. So when you say residential, do you mean like houses, flats? Both?
Yeah, normal buy-to-lets. We do block management as well, so we deal with bigger units, anything from 25 up to 40 beds. So block management, normal buy-to-lets, you name it, we'll do it.
Yeah, good. And the reason I'm asking is, what do you find is like the tipping point between someone wanting, I want a HMO room because the bills are included, and I might pay anywhere like, high 400s to 500, 600 to, well, actually, I want a flat that I will pay rent, but then I know I've got to pay my own council tax and my own bills. Like, what's the tipping point in terms of either price or what the tenant wants, or like what are you finding in that area?
And I think what you generally find is like a 1-bed flat will be a very similar sort of price off market to a studio. So around that sort of anywhere around that 800 sort of figure. The appeal really is that they're furnished, isn't it? And all the bills are included. So I think, again, a HMO is not always a long-term solution for somebody. 6 to 12 months, general rule of thumb, is how long somebody will stay in a HMO for. Whereas, we've had buy-to-let residential flats and houses where it's somebody's home, they're there 4, 5, 6, 7, 8 years. So it's just the two completely different markets, really.
That's good. Yeah, so I think if it's priced the same, because this is what I look at, I've got many HMOs. I'm obviously been working with you, asking you, hey, like if I bring these flats to the market, are they going to rent out? You're getting your experience as well as doing my own due diligence. And you're right, it's like they are roughly about the same price. Yeah, the benefit for the tenant is everything is included, but it is more of a short-term solution. But for the flats, because here's the thing, are you going to, like, when you do a HMO, this is now from an investor's point of view, this is what people have got to think about. I don't split the titles or do individual studios that I'm going to sell in a 5 studio, 6 studio, even 10 studio place. It's like a whole building, right? But when I build flats, I can create, let's say I'm working on a project to do 8 flats right now. I can sell 2 of them if I want and keep 6, or sell half of them, sell 4, keep 4. Yeah. So that's one side of it. But then the other side of it is people will stay there longer because, it's basically a flat. So, it's isolated. Most people are going to stay in a flat until they want to buy a house. But I mean, if you look at how many flats are all around the country, man, it's insane. So obviously the market is there, the demand is there, and I don't think we can build them fast enough.
Yeah, 100% agree. And you as an investor, it's really important to diversify exactly what you've got. It's great to have HMOs, but it's also good to, like you say, do new development flats and have different strategies, really, I think. So I think there's always a demand for quality self-contained living, essentially. And then 1 and 2 bed flats and studios, they're, really, really popular.
Yeah. But also, like, because if I get 8, like if it's big enough to do 8 2-bedroom flats, it's probably big enough to do 20 studios. Yeah. So like people might say, oh, I want to do that. But then you got to think of the refurb cost to go and do 25 freaking studios or 25 units, might be double en suites or whatever, versus, well, I've only got to do 8 units. Yes, you would get a higher GDV on 20 studios, of course. Yeah. But then there's all the other complexities. So I like you just said, the diversification of this, because now as well, okay, we'll get the same rent around, let's say 700-800, but I do now have the added benefit of I can sell 1 or 2 if I need to release capital or pay investors back from doing the deal. But also that 700 or 800 pounds basically is all I'm paying, because now I just use that to pay the mortgage. Because I got no council tax to pay, I got no utilities to pay, and so on. So
there's a lot less risk. There's almost like a lot less risk, isn't there, with your standard buy-to-let, which is, security for some people, but it's, no risk, no reward, and all that as well, Mark. So
yeah. But I think that's why there's so much opportunity for people to make basically society better, it's better standard of living. Like you mentioned right at the beginning, like the standard just in Derby alone has risen so much. Like you look at some of these studios that come to the market, serviced accommodation is another thing as well. As we use the property for service accommodation, which is also now being reverted back to HMO. So like there's so much diversification that people can take advantage from. So I mean, my advice is you got to learn to go and do it. Yeah. So before we sign off, I want to tell people how they can go and do that. Actually, is because we've got at the end of this month, whenever you're watching this, I don't know what platform you're watching. By the way, let me know in the comments what platform you're watching, and if you do have any questions before we sign off. But on the 31st of January and the 1st of February, we're in the East Midlands for the Property Entrepreneur Bootcamp, 2 days where we'll be teaching all these strategies, actually showing you exactly how to go and do that. Let me see if I can drop a link in here across all of these different platforms. So you guys can go and get your tickets, because time is a ticking. It's only a couple of weeks away, and it will help you set up your 2025. Yeah, let me get this in it. So any questions before we sign off? But so like anybody who's out there who's either thinking about starting, James, or is already in the game, what advice? Let's start with the people who are starting. Yeah, what advice would you have for them if they're just starting out? And what advice would you give them regarding the good old what's it called? The good old management side of it.
I think come and speak to it. Like I said at the start, come and speak to us beforehand. Find out what the demand is in the area. Find out what we recommend, what you should be buying at what time, and just come and have a brew with us and have that conversation beforehand. Work out all your costings as well, like you said, refurbishment, what your management fees are, and just make sure that your profit margins are correct.
Yeah, brilliant, good. And what about if someone's already in the game, but they want to like start making more money, start to scale? Maybe they're not kind of hitting the numbers they want. Maybe they've made a few mistakes. Like, what would you say to them to help them get on the straight and narrow?
Come to Monkey versus Owl. We'll sort it for you.
Yeah, awesome. Hey, look, you're so modest, so easy. Yeah, so easy going. You ask him a question, he gives you the data. You don't. James is not someone who talks fluff, tells you, oh yeah, I'm going to get you £1,000 a unit just to like get you as a client. He doesn't do any of that stuff, right? So you need to operate with realism in this game. Too many numbers overinflate. And lie to themselves, lie to other people, not because they're bad people, just because, I don't know, I think they're just dreaming about, they want it to work. But reality shows up on your profit and loss, basically at the end of every month. Yeah, so by then, though, it's too late, because that's a profit and loss is showing you what's already happened. Yeah, so what James is saying, what I'm saying is get yourself to the Property Entrepreneur Bootcamp, learn how to do it properly first. Then, you get in touch with someone like James, when you start finding the deals, when you learn how to find the deals, and you get because we give you a formula to follow. Yeah. And then James is someone who fills in the blanks on this formula of like, well, what would the rents be in this area? What would I get for that? Is the demand there for this type of product? Because there's no point building something and getting into something that then you can't fill. I mean, I see that so many times, James, like people building houses, even trying to do flips, and just no one's buying the house. And I'm like, did you even look at what people wanted in the area? And obviously they didn't. They didn't.
Your most successful people have invested in themselves and come to, training such as yourself that have helped them get the right knowledge to make the right decisions ultimately as well. So it's make sure you get the right property education as well, guys.
Yeah, absolutely. Very good. So the Real Life Tribe are in for an absolute treat, because we're going to have a private session behind the scenes where we can talk about and say whatever we want and share all the behind the scenes data. So we'll be doing that pretty soon. So we'll see those guys. But James, thank you for coming on. Thank you for losing your virginity of coming on a podcast with us. Yeah. Thank you so much. Sharing some wisdom and some knowledge. Look forward to going deeper when we go into the Business Monday session. Yeah. So thank you so much, James. Thank you, everyone.
All right. Speak to you soon.
Till next time, do the right thing for the right reason. It's the only way